JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 22nd of February 2021. So yep guys, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So guys, also just before we continue, I just wanted to quickly kind of apologize for any kind of little maybe technical issues or a little kind of streaming interruptions. Basically, once again, I'm not really doing these videos from my normal spot. So yep, unfortunately, like I said, the internet connection might be a little bit on the lower side. However, hopefully everything runs smoothly. But yeah, guys, still. Nevertheless, I would like to apologize for any kind of bad quality of the video. So hopefully, it's gonna be probably like this for another week at least. But I'll try to see if I can do anything going into next week. But again, like I said, there might be a few little technical issues here. But jumping into the charts. Now, the first one I want to pick up here is Nikkei 225. Again, if you remember last week, I talked about this index and what I was saying basically that in a way, if it manages to climb back above this 30,297 territory, which is the lowest point of, let me just, bear with me one moment. Let me just jump into a monthly chart very quickly. So that's the lowest point of July of 1990. If it manages to climb back above it and stay above it, then yes, in a way, higher levels could be met. We could, or at least I should say, we could start aiming for some higher levels. But we did get a nice push higher today. But as you can see, the index kind of got pushed back below this area, and well, the index kind of stayed below it. So in a way, it's kind of still potentially keeping that scenario on the table of seeing maybe a bit of a larger correction here to the downside. However, if you want to be a little bit more on the safe side, what you could do here is you could keep an eye on the low of 19th of February here, which is near the 29,847 zone. Just if you're a little, just to be a little bit more comfortable with, let's say, examining slightly lower areas. So a nice drop below this may open the door towards for further declines here, or should I say further declines in the short run, because again, we could still consider this move lower as a temporary correction. So for now, that's the kind of the little game plan here. Now jumping into Shanghai Composite, and here the index drifted heavily to the downside. As you can see, it ended well in the red, however remained above some of its key support levels. So in a way, we could see this little move lower as a kind of temporary correction, I would say, because again, if let's say by any chance the price continues to trade above this hurdle, above the highest point of January near the 3,637 zone right here, then maybe we could see a nice rebound and a push back to the upside. But if it starts drifting lower here below this area, still there is a chance for the bulls to step in somewhere maybe near this 21-day EMA or this 3,587 territory, or even if it slides further south. I mean, look at this. I mean, we're still trading above this upside line, so drawn from the low of the 19th of March. So in a way, any move, any kind of pullback here could be considered as a temporary correction before another possible leg of buying. So in a way, there is a lot of space here for the bulls to step in. So that's why probably those who are willing to short this should be very careful and should keep that in mind, because again, if you're just go step by step on this one and always have your stop loss in place, and if you're in profit, then of course have it on break even just in case this suddenly reverses and pushes back to the upside. So again, yes, we could go for maybe a larger correction to the downside, but still basically there are a few kind of areas here where the bulls could step in. And of course, like I said, if we drop below this 3,637 territory, then my next target is the 3,587, and then we'll take it from there. If you want to be a little bit more, let's say, on the safe side with the upside, well, of course, you could wait for a push above the current highest point of February near the 3,730. Well, let's round it up here, maybe a little bit towards 32, and then yes, we could go maybe first for that further upside. Now jumping into the German DAX, and so on Friday it managed to recover somewhat. However, it's still closed in the red for the week. Let me just quickly double check that. So yes, it still was a red week. Yep, in a way, although for now it's kind of still, or should I say, it remained above that 21-day EMA. Of course, it keeps the upside scenario still on the table, but let's have a look at the cash index, and we can see that the cash index is drifting back down, and currently it's balancing around the 13,900 zone. So basically we are below this even hurdle, this 13,917 zone that I spoke about previously, and we're stuck here below this 21-day EMA as well. So long story short, guys, be very careful. Of course, as I mentioned to you last week, if you want to be a little bit more on the safe side, well, wait for maybe a drop somewhere below this this area right here, this so-called potential neckline. But to be honest, it doesn't really look as a clear, let's say, head and shoulders, oh sorry, not head and shoulder, double top pattern. We do have the so-called neckline right here, but again, if it drops below the 13,830 zone right here, marked by the low of the 10th of February, then yes, we'll go for a bit of a larger correction to the downside, guys. So keep that in mind. Now jumping into DXY, another index, and this one's a dollar index. For now, basically, it's a little bit tricky here. We are seeing that there is a bit of a hold up near this 90.25 zone right here. Yeah, I mean, again, at this point in time, we have to be very careful. We have to be very cautious, and we'll wait for a better violation of this 90.25 zone, and preferably, of course, I would like to see the daily candle staying below this 90.25 zone, because in a way, this way, I mean, we could maybe get a little bit more, how to say it, get a little bit more confident, I would say, with further declines. So because as you can see, we kept getting these overshoots here, and in a way, I mean, these false breakouts didn't really help the bears very much, I would say. So that's why maybe a bit of a daily candle here staying below this area, below this 90.25 zone, could do the trick for more sellers. So keep that in mind. Jumping into gold, and here, for example, you can see that yes, gold is pushing back up, or at least trying to, after reversing from the lowest point of November, which is around here, this 1765 territory, roughly around there. Yep, gold is now pushing, or just at least trying to make its way higher. However, the same story as a couple of weeks ago here. I mean, what I said before was that yes, it could push higher, it could, but if it struggles to overcome this downside line here, drawn from the high of the 7th of August, in a way, I mean, we could see a bit of another potential kind of move lower. So long story short, basically, for now I'm sticking to this little idea right here that we could maybe see another push higher. We could maybe see a test of the 200-day EMA or even this downside line. But if it all struggles, if the bulls struggle to overcome that area, then yes, another slide here could be possible. Yep, I mean, then we could start looking at maybe some of these levels, some of the 1704 zone, roughly around here. But again, let's keep it short and simple for now, guys. Let's see how this is going to play out first. I mean, we could see him push further north, but if the 200-day EMA together with the downside line kind of will provide decent resistance, then yes, another slide could be possible. So in terms of the upside, of course, to get a little bit more excited with, let's say, higher levels in the medium term, of course, a break of this downside line is required. I do understand that we did have a break here back in the beginning of January, but if we look at the weekly candle, we'll see that all this was just seen as a nice false breakout, basically. So yeah, if we do get a break of this downside line, yes, we'll start aiming for some higher levels, but of course we'll keep an eye on the weekly candle as well. Jumping into WTI oil. So quick update here. It's a bit of a mess. Let me just let me get rid of all the lines, because it's kind of in the way right now, and let's have a fresh look at all this, because we've managed to reach these previous levels. So let's kind of reevaluate this again. So overall, on the on a bigger picture, we can see that we are having a nice move higher here while trading above this upside line. Now, the reason why I'm taking this low right here, the low of the 21st of April, because this was a bit of a, if you remember, there was a bit of madness here, so not really a clear candle, I would say. And to be honest, this upside line is also a very tentative one, so maybe don't really focus on it too much. The only thing is that why this is kind of attractive is because it kind of coincides with the 100-day EMA here, shown as the green line. But from the shorter term perspective, you could keep an eye on, let me just drag this one from here, from the low of the 2nd of November. You could keep an eye on this upside line, actually. Let me just double check if this is going to work out much better. Yes, I think this is going to be a better line. Yep. So we'll ignore this little kind of breakout here. And so the low of the 29th of October here, if you draw an upside line from here, you can see we have still an uptrend. After last week's test of this little barrier right here, the 62.25 zone, the commodity drifted lower and it corrected to the downside here. So, but still has a bit of room here. It could push a bit more lower. It could test the 21-day EMA, because also I'm keeping an eye on the 21-day EMA, as it recently recently it did provide very good support. So long story short, basically, guys, in a way, there is a chance for this one to drift a little bit more to the downside, to test the 21-day EMA, and then if all this area here provides good support, we could see a nice rebound and a push higher. If you are if you're a little bit skeptical, I mean, what you could do is, of course, wait for a pop up of the 62.25 zone and then go for some higher levels. So this way, the commodity will confirm a forthcoming higher high, and more buyers could join in, and then we could start aiming for that 65.62 zone, marked by the highest point of January here of last year, of course. And then we'll take it from there. For the downside, Well, I mean, of course, a break of this upside line is needed, but depending on how we're going to trade here, I will review the potential level. I mean, currently we could say that this is the little hurdle that we could keep an eye on for the downside at 53.90 zone here. But I might kind of shift maybe this breakout barrier for the downside somewhere here, and then we'll take it from there. So yeah, again guys, for now, let's see how this is going to play out near this 21-day EMA, and if we're going to get a nice rebound or not. Bitcoin Cash. So this one is well, I mean, looking at this picture, first of all, I mean, we can see that yes, of course, it did have a nice rally, but after kind of it hitting the 773.30 zone right here on the 15th of February, it kind of stalled. It started moving sideways, and yeah, now it seems like it could be flagging out here now. It could be forming a possible bullish flag. So we have our little pole right here, and we have this little consolidation. So yep, I mean, this could be seen as a potential bullish flag. However, if you want to consider that idea, yes, you can. The only thing is probably be very careful, because still, in order to go for some higher levels, still I would prefer to wait for a push at least above the 750 zone right here, which also continues to act as a good area of resistance. So a nice pop above the 750 zone, yes, may open the door towards higher levels, but still we have the current highest point of February to overcome, which is around the 773.30 zone, and then yes, we could go for some higher levels. So that's why, guys, although yes, it looks like a nice bullish flag, but there is a chance that this might not work out. So that's why basically for now I'm keeping an eye on this area right here, this 750 zone, and then yes, if we get a nice pop above it, I'll aim for some higher levels. NZD USD, guys. So looking at this picture here, I mean, you can see that this morning we've popped above the highest point of January near the 0.7315. But the interesting bit here is that the pair is now drifting back down. So the big question here is, can it stay above this area, above this hurdle? And for now, basically, well, I'm just gonna stay calm here and just observe the price action, because in order to go for some higher levels, I need that daily candle to remain above this area. But if it doesn't, if it stays like this, then we'll just get ourselves a nice false breakout here, or which we already maybe have received. So if this stays somewhere below here, then maybe a bit of a corrective move lower here could be possible. However, I mean, still, guys, I mean, we do have a bit of an upside line here, which we could keep an eye on. So in a way, if you want to kind of go for some lower areas, well, wait at least for a break of this upside line, and then yes, maybe we could start aiming for those lower areas. So yep, be very careful with that, guys. Now, jumping into USDCAD, and here basically it's a bit of an interesting situation. So we've managed to reach this target, the 1.2580. So let me just quickly shift this a little bit this way. So 1.2590 zone. So I've talked about this level, and last week we managed to, actually failed by just a few pips of reaching that, but we've managed to reach that this morning, and that was the lowest point of January. So we managed to reach that area, this one right here, and now the question here is, can we see maybe a bit of sideways activity here? And basically what could happen, we could see maybe a push back up here, we could test the 21-day EMA again, and maybe if it struggles to overcome this downside line again, then another slide could be possible. So something like this could happen. Of course, we've seen this already happening several times, but nevertheless, the same kind of probably idea would remain for the downside would be that a break of this 1.2590 territory here, another drop below it, yep, could open the door towards lower areas. This way kind of confirming a forthcoming lower low again, and yep, we could start looking at the next target at 1.2527 here, and then we'll take it from there. Of course, for the upside, I need that break of this downside line and a push above the 1.2764 territory right here. And GBPAUD. So this one is a tricky one, an interesting one at the same time. So if you remember, several times already, I've mentioned this one last week, and basically what I was saying, that in a way I'm keeping an eye on this upside support line drawn from the low of the 7th of January, for now, basically, yesterday, on Friday, we managed to break this one. So, yep, that's kind of good news for the sellers. However, if you remember as well, I've talked about this hurdle, this 1.7789 zone, and basically I need that break here. I need that daily candle to stay below this area in order to go for some lower areas. Well, I mean, because what I don't want to see here is basically this one ending up being a false breakout, and we could see a nice reversal here back to the upside. And this way, basically, we could start ranging here between these two levels, the 1.7789 and the 1.8024, and that's what I don't want to see here. But again, I mean, the market doesn't really do always what I want it to do. So yeah, let's go from here. Basically, if we do see that daily candle remaining below this 1.7789, then yes, I'll start looking at some slightly lower areas. We can get rid of this upside line, no longer needed. Now the main focus will be on this little kind of range. EURUSD. EURUSD, if you remember, also I've mentioned this one, and I've mentioned the potential idea of seeing a possible inverted head and shoulders pattern here. So we have our so-called neckline around here. So it's roughly around here. Basically, it's a little bit tilted here, but nevertheless, it kind of also comes in line with this level here that I talked about, the 1.2156. And if you want to aim for some higher levels, I need that break here. I need that break through this neckline, through this 1.2156 territory, and then I could go for some higher levels. But at the moment, I'm just staying put here, because even with the downside, in order for me to maybe start considering lower areas, I need to see a drop below this hurdle, below the 1.2023 zone, and then yes, lower levels could be met here. So long story short, basically a drop below this low here, the low of the 17th of February, near the 1.2023 zone right here, could open the door towards the lower areas, because this could mean that we're scrapping the idea of the potential inverted head and shoulders pattern, because the rate would fall below the right shoulder here, and maybe we could go towards that previous head here, the current lowest point of February, near the 1.1952, and or even lower. But because we're right now above the 21-day EMA, I'm gonna lean a little bit more towards the upside. However, actually, I'm not going to lean towards the upside. I'm going to stay neutral on this one, because again, it's a little bit of a tricky one. So that's why, in order for me to go for some higher levels, I need to push above this barrier right here, and then yes, I'll go I'll get a little bit more excited with the upside. So yeah, that's the kind of game plan here for at the moment. And there's not a lot of clarity, I would say, in the market right now. So that's why be very careful, guys. I mean, we are, and especially with the indices, we are at like all-time highs, and we're seeing a bit of a corrective move. So we could see a bit more corrections, but again, how long? I mean, that's another question to answer. So that's why I'm keeping an eye on certain levels and certain support and resistance areas, and which I've mentioned already. So yeah, guys, be very careful. It's the start of the week, but I hope it goes well for you. So thank you very much for watching and listening. I'll have to wrap it up here. If you want to catch my video later on, my traders tea time, as always, 13:30 GMT. But for now, guys, have a wonderful day, stay safe, and I'll see you later. Thank you very much, and bye-bye.